Welcome to Xylostar's Market Update. Here we have today Mr. Amir and Mr. Samir to share the latest updates of the market.
Another week, another exciting movements in the markets, especially technically, and we're going to dive into it in a second.
Donald Trump treated European Union for 50% tariffs, and by the way, GBP skyrocketed because of the GDP and retail sales number, which published strongly higher than expected. And from the other hand, BTC reached to 110K.
Hello everyone, welcome back to another weekly market update. My name is Samir Raslan. I'm a senior technical analyst at the Institute, and here we are analyzing market movements for the upcoming week. To get it off with US 100 or NASDAQ. So as you can see, markets has formed for us technically, but we can see an up movement to the upside. And here we have some sort of expanding wedge before the market fell down to the trend line. And also we have this candle that is also giving us an understanding similar to doji formations. And in high liquid markets, we merely see any doji here and there. But it gives us the same understanding of what should be happening, right? So from here, market fell down. So you guys, you see this very big red candle here. So this gives us an indication that markets fell down to liquidate these lows, retrace to the trend line. In an optimal scenario where market is bullish, we want to see an engulfing or some very strong candle here, even if it's a inverted hammer, anything that gives us an idea that there's strength in bullish momentum. However, what we saw is a smaller green candle retracing to a minor support here, followed by a red candle. So what it looks like as US 100 wants to liquidate this trend line and go to the support that it hasn't retraced to since the breakout it did on this ascending triangle previously. So coming to fundamentally, yes, and I've mentioned this multiple times before, that tariffs are merely some movements they are doing to make some drama in markets. If you guys are following us, you should have known this. If not, then make sure to follow. What are you waiting for? Anyways, so they are finalizing the stage between finalizing the last stage of tariffs between US and Europe. So if they come to any sort of tariffs, right, markets should liquidate, and it might actually push further down. If to what's seemingly to happen, that there are no tariffs, market technically wants to liquidate this trend line and continue in an uptrend. So liquidate trend line and retrace to support. So that's about NASDAQ. Now, going to Bitcoin, and yes, the most beautiful asset on the planet. Okay, arguably. Anyway, so we can see market has crossed a historical point, $111,000 per coin. All right, so this uptrend, actually the line should be a little bit more tilted to the upside. It's more of a narrowing uptrend to the upside because of all this bullish momentum. So what we want to see Bitcoin doing, actually, if we go to a higher time frame, we can see on a higher time frame that Bitcoin is on a strong bull run, and we can expect Bitcoin to go down, retrace to the resistance, touch the trend line, possibly go a little bit below it because of momentum, 106, 105 before a continuation to the upside. Yeah, so this shows 104, yeah, approximately around the same. So that's about Bitcoin. Going to Nifty50, also markets are performing in India pretty well after the settlement between the situation that was happening between them and a nearby country, Pakistan, you guys are familiar. So yes, markets are very bullish. We can also see a trend line moving in this direction, or an ascending channel. Yes, this was a liquidation. Anyway, so it's not really a part of the channel. Let's try to draw it better. So we can see markets going up from it. So from here, markets actually might try to break above this minor resistance, or it's not really a minor resistance, it's a resistance on this time frame. Fill this gap at the trend line. right? And then retrace to the support and continue an upward movement. Yes, this indication shows or represents that markets should be retracing to this support. But fundamentally and even technically, we don't really have all these solid reasons for a huge drop in Nifty 50, especially that markets are performing well for the past while. So that's about Nifty 50. Look for a long entry, I would say. But don't buy from now because we're almost about resistance. You never want to buy premium. Yeah, and if you want to short it, it's not a bad short if it goes up a little bit more at the resistance, but make sure to put in a considerable stop loss before continuing into that trade. Now, going to gold, the most beloved of everybody. For those who don't know, I'm a huge gold fan. I'm basically a Bitcoin gold trader. So today we're going to be speaking about gold. So gold has beautifully reached to the trend line on a daily time frame, 4-hour time frame, and retraced from it very strongly, even though we had this downtrend in gold for a while after the tariffs semi-settlements and the settlement between the Asian region situation. But as you guys can see, right now, markets isn't really at a solid resistance. And what we're seeing on gold is a big bull flag, right? So from this retracement, hitting the trend line, creating this bull flag, we might see actually a very strong break to the upside. Guys, you need to keep an eye on the bigger terms that are happening, bigger conditions of markets. Remember that eventually the Feds want to cut interest rates, right? Remember that eventually, as I've mentioned before, they want the dollar to become weaker. In the previous videos, they might send Elon Musk to check about the gold reserve in Forks Knot. So we have so many background confirmations that on longer term, gold can actually cross 4,000 pretty easily. So next target for gold we might be considering is 3,800s. And this bull flag, especially with this strong momentum after making for us this some sort of ascending triangle here. And if you guys follow me enough, you know that I am in love with ascending triangles on gold. So we can see a very strong breakout to the upside, and from here we can expect to see a breakout to the upside. Or it could be something like break like that, retrace, and continuation. Of course, market don't just skyrocket, especially we're speaking on a higher time frame. They have to move in channels, trends, logical ways, logical manners of how many flows in markets. But yeah, this is what it is. So things on short period of time are cooling down, but the bigger picture is still very bullish on gold. So if you ask me, is there any reason for gold to drop to 3,200s or 150 or the trend line once again? We don't really have as much of strong reasons. Now there is another scenario where for whatever reason peace happens around the world and gold falls, and if it falls to here, probably it will drop below the trend line and continue in this down channel, right, reaching maybe to the support, something like that. Boom. Yeah, if that happens, but it is very unlikely. All right, so as you guys know, it's all about us understanding the bigger picture, knowing exactly when to enter, how we manage risk, and that's how we become profitable. It's never about predicting everything 100%, but you need to have an idea what you're doing before you let your money work for you. Okay, now going to EURUSD. Now on a short time frame, we see this a little bit of an uptrend going into resistance. Yes, market performed for us head and shoulders here before a drop to the support, and this is on 4 hours time frame, right? So yeah, we see a little bit of weakening momentum on this time frame, reaching to this resistance. However, if we shift to the daily time frame, take a look on a bigger picture, wider scale. So what I can see is market consolidated for quite a while. It liquidated all these lows, reached to, it should have reached, actually made a double bottom, but guess what? It seems like there is a huge demand on euro, or exactly what I've been saying for a while, there's a huge desire to weaken the dollar. And this is why the Euro USD didn't even reach to the demand zone itself. It went from above it, right about, slightly about this gap or this support. So from here, we are having a small ascending triangle here, bull flag, another bull flag, and also markets are nearly above trend lines. So, and there's a bull flag. So we see a very strong momentum to the upside in Euro USD, which also serves the same idea of gold going up, USD going down, and every other thing having putting into as an information for the past while. So markets are flourishing, guys. I can see pretty interesting opportunities. And also, if you look at this beautiful movement here, you can see that markets did a breakout to the upside and retraced the trend line and also the support level here. So we can expect a beautiful continuation in an uptrend for Euro USD. And as you guys can see, there is still a huge potential to where it can go, right? So optimally, if this breakout happen, this will be our next target. So this will be it about Euro USD. You guys want to be updated to Zylostar content, feel free to follow Zylostar Education on TradingView. And see you guys in the next one.
Greeting everyone, hope you're doing great. Amir Amidian here, Senior Fundamental Analyst at Zylostar Head Office located in Dubai. And today we are going to talk about another market update and reviewing the most crucial aspect of financial market, which is fundamental. I want to kick it with the US economy and talk about the PMI numbers, or let's say Purchasing Managers Index. The US composite PMI numbers rose to 52.1 in May, signaling expanding business activities driven by easing trade tensions. Input prices from the other side hit their highest level since November 2022, raising inflation concern. S&P chief economist Chris Williamson said the rebound reflects firms and customers rushing to beat potential tariff changes after the July pause ends. From the other hand, we got also the Canadian dollar CPI numbers. The stronger than expected CPI numbers, or let's say stronger than expected core CPI data, pushed the Canadian dollar higher as markets dialed back expectations for a June rate cut by the Bank of Canada. Another chapter is about the Great British Pound. The British Pound has strengthened this week as UK retail sales and inflation data beat expectations, signaling resilience in the UK economy. Hotter than expected CPI at 3.5 reduced the chances of near-term rate cuts by the Bank of England, and it supported the Great British Pound to be stronger. Meanwhile, growing investors' concerns over US fiscal risk and tariffs pushed capital flows toward UK assets. From the geopolitical side, we got that Trump threatened a 50% tariff on European Union all goods, but Secretary Bessent later clarified it was just a line meant to pressure the European Union into speeding up tariff negotiations. From the other side, we got Ukraine and Russia. So in Ukraine and Russia carried out their largest prisoner swap of the war, each releasing 1,000 captives in a move seen as a rare diplomatic breakout. The bottom line, Bessent mentioned that the US and India tariff talks have progressed, but only slightly so far. So here we got the latest update from the financial markets and what happened in the last week. Let's have a look for the upcoming week. Regarding the upcoming week, the main focus will be on the US and Canadian dollar, because we are gonna get the FOMC meeting minutes, or better say the most important document from the Federal Reserve, which is gonna show us the latest information with details about the FOMC meeting. Regarding the US, we are going to have also the second estimate, or let's say the first revision of the GDP, or gross domestic product number, from the United States. And by the way, at the end of the week, eventually on Friday, we are going to get the core PCE, and PCE means personal expenditures index, from the United States. But don't forget, we have also the GDP number from the Canadian dollar and CPI number from the Australian dollar. Stay tuned. See you next week.
Thank you for watching us. And do not forget to click on the buttons below. And see you in the next market update.